So, hello and welcome to another episode of Good Fat Life. And today we have a very special guest. This is the topic is near and dear to my heart. And you might wonder, what does talking to your CPA have to do with living a good fat life? Well, I will say kind of everything, right? So I'd like to welcome AJ Gross, ALG Tax Solutions,
That's right,
to the show. And AJ, why is a CPA important to good fat life?
Well, you say that, good fat life is, you think it's more about nutrition and your health and fitness, but finances can actually be a pretty big pillar in your life. So a CPA is there to help with your finances, not necessarily with financial planning, but the tax side of finances. And a lot of times a CPA can actually know a lot about little things that you may not be aware of, that with helping for retirement or just saving money or buying a new house, selling your house.
You bring up some really great points. There was an article, in fact, I meant to bring it today. I think it was in the Wall Street Journal, about how if your finances are a mess or not where you're clear on them, you can be really sick. It can make you very sick.
Yeah.
It adds stress. You can have heart attacks. You can have all kinds of things from the stress caused by financial instability.
Absolutely.
Right. And so I never realized for years and years and years that until I started my own company, right, what an impact, and I will say the right CPA, not every CPA, right?
Right.
Because we've worked with lots of CPAs that really have a different opinion on how they go to how they approach you and your business, right?
Correct.
So that can be very transactional.
Right.
It's like you give them the information, they see you get back. But how you show up, which is why I love working with you, and we work with a lot of clients together, is that you really look at what somebody wants to create, the life they want to create, and then work with them from those perspectives. So talk a little bit about that.
I mean, CPAs are naturally introverts, right? And so it's very...
I never knew that, right?
We don't talk much. I wouldn't say we don't like people, but if we want to go to a party, it's probably a struggle for us. Okay. But the thing is that for my practice, or in my background, I've been in sales all my life. And so I'm a salesperson that kind of became a CPA. And so that really helped me understand, because with sales, you're really trying to understand the customer's perspective. Okay. What are and you want to understand their needs, and then based on those needs, you're going to offer a solution. So I took my background of sales, and then I do have an engineering degree, which is odd as for being a CPA. And technically, I don't have a CPA, or when I say a CPA, accounting degree.
Okay.
What I ended up doing is I went into engineering. I have an electrical engineering degree. Went and worked for Motorola as a sales engineer, and then decided it wasn't for me, and I went into accounting. And so I took all the necessary classes for accounting and to pass the CPA exam.
I forgot that about you.
Yeah.
Right?
Right.
So because and I've worked with lots of CPAs over the years, but you are so unique in the way you approach your business and your client's business, right?
Right.
But that explains a lot of it, right?
Right.
So it's not an accident, right?
Yeah, well, you say nothing is an accident, right?
Right.
We're all meant to do something.
Right, but it also reinforces how, because you talk to young people and there's this fear like, oh, I have to get it right or I'm going to screw up my life for the rest of my life.
Right.
But the truth is, lots of us have built on the thing before.
Correct.
Right? So, okay. So that said, what's your approach? So when somebody comes to see you, how do you approach them? What makes you different?
There's some key things that we try to do with all of our clients. So for the very first thing, one of our key pieces of our culture, and it's one of our things that we drive as far as everyone in the team, that everyone matters. And we say that because that's kind of lost in today's world that, we're just transactional people. We go in the store, we go to a major store, and here's your goods and goodbye. And that's not something that we want people to feel. We want people to feel that people matter. And we also drive that our employees matter, so that everything that we do is based on a sense of love and that people matter. And we take that for every interaction that we have with our clients. So,
and you feel that. I mean, you feel that. You call your office or you talk to somebody or send a text and yeah, you feel that.
Absolutely.
Right.
Yeah. And we measure it. And not measure it in a technical terms, but in a sense that we have continuous meetings with our employees. And even in some of the changes we made in the last year, some of our employees and says, oh my gosh, this has been a joy. I've seen the changes that you made. And that carries forward to helping our clients. So that's the first thing is that every interaction that we have with our clients, our focus is to show that they matter. Because taxes are a complicated matter. No one really wants to deal with taxes. So we can make our clients' lives easier by showing that they matter and that we care about their taxes.
You do it in a way that supports the life they want to create.
Correct.
Right? Talk about that a little bit. So what are some of the things that you would do around helping them with their taxes, but bigger than that, building their life?
Yeah, so we'll talk to the client and really understand where they came from as far as were they doing were they doing taxes on their own? Were they hiring? Did they have somebody else? And then understanding why are they making a change? Because there's something driving them to make a change to wherever they were before. And based on...
To come work with you.
To come work with us or any other
Okay.
CPAs. If someone's looking... They're looking to make a change.
Okay.
And to understand why they're making a change, and then how can we satisfy those needs? And then to understand what needs they may not even be aware that they have that we can also help with.
So talk about that a little bit more.
Sure. So we have a different client that called yesterday and that I talked to, and they're looking at doing some charitable giving. And so we're talking about charitable giving, and she expressed her idea of doing some charitable giving because she's going to have sufficient money from her retirement. She has sufficient money saved up for retirement that is going to satisfy for her for the rest of her life, and then she's going to have sufficient retirement to leave to her kids. And she wants to understand what's the best way to do charitable contributions. And you can just take money and says, yeah, you can give. She's looking at tens of thousands of dollars of giving to whether it's her church or a local charity that she's looking at giving. So we kind of understand. So we can say, well, if you have these, what they call for retirements, you have, when you're reached a certain age, you have these, what they call RMDs, required minimum distributions from your retirement account. And so you have to take them out. And I said, well, if you have to take them out, you can just give money to charities, and that is a deduction that you could potentially take. But the thing is, with deductions like that, you have your standard deduction, which is right now around, for a single person, around $16,000. So if you contribute, say, $25,000, yes, you can deduct that, but you're really only deducting an extra $8 or extra $9. 25 less the $16,000 of the standard deduction, because you're already going to get standard deduction no matter what. So I said, well, you can do what they call the qualified charitable distribution, which is from your RMD, you can donate directly to the church, say $20,000, and then you don't have to report that money as income from your IRA. So essentially, you get $20,000 reduction of income, and you get the itemized deduction of $16,000. So that's theoretically a $36,000 deduction.
So, but that one example, while as I'm listening to you, I'm reminded that, so maybe you're not talking about your retirement distribution, but you could be talking about how you're funding your kids' college, or a second house, or all of those things. All of those things you can help people plan around.
Correct.
Right? So that they are getting the maximum the maximum income, if you will, or spending power that the law allows, and taking the deductions and doing it all correctly so they're honoring the rules of the IRS.
Right. And it's not really a loophole. It's just
understanding how it works.
Understanding
right?
how it works.
And that is where I know that the value, so however much you're paid to do the taxes, you do the taxes, but you also bring this wealth of knowledge, experience, and understanding of laws that are very complicated and often very irrational in, my humble opinion, because they just don't make sense, right? But that's the law.
Right.
And so that's huge. To me, that's huge in supporting people in building their, we like to say good, fat life. Because now you're a trusted partner in that process.
Right.
Right. And from what I've seen, like the fees can seem like a lot, but when you put it in perspective, it can save you thousands of dollars or shift thousands of dollars into creating the life that you want to create.
Right.
Right.
Yep.
So, and that's where, I wanted to be, I want to help our community understand the role you play is critical. It's like your dentist or your doctor or your educator in building that life.
Right.
It's not like, oh, dang, I have to do my taxes.
Right.
Quick question, pricing. So how's the pricing different for like an H&R Block versus coming to somebody who's specialized like you are?
Well, you'd be surprised. You can actually pay just as much in H&R Block as paying for our services.
And you get just this simple transaction versus everything else that you guys bring.
That's right. You get the simple transaction with H&R Block. You get your taxes done that day, and then it's done. Versus us doing your taxes and pointing out things, changes that you may not want to make for the next year, or any adjustments you want to make. And we're available all year round. We have people that contact us, and we don't necessarily charge, and we respond within 24 hours.
So it's the difference, again, from just getting a one-off transaction or getting this whole package that you guys bring to the table for, it could be this comparable cost.
Absolutely.
Wow. That's amazing. That's amazing. Good to know. Good to know. Okay. So what are some of the things that you see that people come to you for that is like stressful for them, or where you really can give examples of a quick, I don't know, not a quick fix, but just like, oh yeah, that's just not how it works. Maybe like Johnny, Johnny and I were talking about, kids' educations.
Yeah, we talked about kids' education. I mean, that's one. We also talked about potentially tax brackets. And I'll go to the kids' education. It's kind of interesting. For the first 4 years of a child going to college, they're going to get this, what they call an American Opportunity Tax Credit, which is a pretty nice tax credit. It's up to $2,500. But you only get it if you're, as parents, earn below a certain income. So if you make more than a certain amount, then you can't get any of that credit.
Okay.
So one of the things that we can do is, and we notice from a client, we have a system where we keep track of our clients. We know that, say after we did their taxes in March, and then they say, yeah, next year my child's going to go to college. So we note that. So then next year when we're doing their tax return, we're going to be looking for college tuition information. And if we know that they make too much money, we can say, well, you could, even though your child may not be making a lot of money and they don't necessarily have to file a tax return, we can say, well, you could, is instead of claiming them as dependent on your return, they can file their own return and get those college credits. And then it's a discussion. Okay. It's worth maybe $500 for the parent, because claiming them as a dependent, or it may be worth $1,500 for the child, and you lose $500. So
they get the $1,500.
They get the $1,500.
Right. Okay.
So we look at the different things such as that. We do talk about tax brackets a lot. I don't think people understand how tax brackets truly work, because we get some clients who will say, hey, they're all worried because I'm getting a raise, and I think I'm going to go to the next tax bracket, and all my money is going to go to taxes. I want to limit my raise. Should I limit my raise? And we tell them, it says, well, the tax brackets are, in a sense, they're stepped up in a sense. So your first $20,000 of income you earn is taxed at 10%. Then your next $20,000 to say $50,000 is taxed at 12%, and then it goes to the next after 70 to, I don't know what it is, about 180 or so is taxed at 20%, and then there's a 22%, 24% bracket, and it goes up. But if you get a raise and you go from say the 20% bracket to the 22% bracket, and you are $10,000 above that bracket, it doesn't mean that all your income is taxed at 22%. Only the 10%, only that $10,000 is taxed at that extra.
Oh, okay. Which is above that.
Which is above that, the extra 22%. So you are still, so if you get a $10,000 bump and you go over the tax bracket by $10,000, well, your taxes on that $10,000 is just 22% on that $10,000.
So you're still getting the
about $8,000. Yeah.
Yeah. You're still getting the, so, I mean, but I hear that a lot from people saying, I hear that from people that are self-employed and also people in the workforce, or it's like, I don't want to, I don't want to make more money because I'm going to get paid more taxes.
Right.
And that's kind of like a limiting belief.
Right.
Because you're still getting that extra.
You're still getting that extra.
And if you're working with somebody like you can help manage how that money is allocated, right? Or you put it in a special savings, or you do something with your kids for school. I don't know. That's your area, but I know that those things are possible with somebody who knows what they're looking at.
Right, and I think when you and I had talked about this before, you said it best. It's you're going to pay more taxes the more you earn. That's going to be the fact of life. Whether you agree with it or not is going to happen. But the more you earn, the more taxes you're going to pay. But the question is minimizing your taxes at the income level that you're at. That's the strategies that we come in, is minimizing the taxes. Because we have, I would say, especially for business clients, we have two different types of business clients. We have business clients that do everything possible to pay zero taxes. They're like, I want to write off this, I want to write off that. And then you have other clients that they don't necessarily work, they're concerned about taxes, but they're trying to make as much money as they can. So you have two perspectives. So the client that tries to limit their taxes and they're trying to write off, they're going to buy, so say you have an extra $50,000 in the business at the end of the year, and you're going, I don't want to pay taxes on this $50,000. So I'm going to buy a piece of equipment for $20,000, or let's say let's call it $40,000. We're going to buy a piece of equipment for $40,000, and that's going to get rid of that $50,000. And now I don't have to pay taxes. But what they don't realize is, if you didn't need that $40,000 or that $40,000 of equipment, that equipment doesn't improve your profitability, nor does it by decreasing your expenses or increasing your sales. You're buying it because it's a toy, you just want it, but the sole purpose is to reduce your taxes. You've just bought $40,000 of equipment and paid saved maybe $10,000 to $15,000 in taxes. So you spent $40,000 to save $10,000 to $15,000. Whereas you could have not just say, all right, I'm going to pay taxes on the $50,000, pay the $10,000 to $15,000, and now you have $35,000 in your pocket.
To put wherever else. Something that makes your heart sing. Let's just say, right?
Whatever it is.
And,
generally, people who are limiting themselves, they don't make very much. I mean, they may do well to satisfy their living costs, but they're not doing very well financially. The other type of client, if I told that one client that's trying to do everything but save their taxes, it says, well, if I told you you're going to make $500,000, but you're going to have to pay $200,000 in taxes, would you take it? Yeah. They're going to take it, right?
Right.
And so we do have $1 million clients. We have $1 million clients that pay $400,000 in taxes. Now, they don't like it, but they are making $1 million.
Right. So I think a lot of it's on your perspective. Right. And the important thing is to think of your CPA, is to find somebody who cares about your life as much as you guys do as part of the team of your financial.
Sure.
I think it's important to have a good banker. Well, it is important to still have a good banker. I think a banking relationship, although there's a lot of different options now, there's a lot of online banking and stuff,
Right.
but to have a good financial planner and a good CPA, those things are just, I think, important for a well-rounded your financial team.
Correct.
And they have different perspectives.
Right.
Right? So, well, so if somebody is kind of like, I don't, what you're saying makes sense, but I don't even know where to start. So if somebody wants to know, well, how do I know when I should do my taxes myself, or I should go to a H&R Block kind of a thing, or I should look for, somebody like you.
Right.
What would you advise people? Where to start?
Yeah, so there was a major tax overhaul made in 2018.
Okay.
It's under the Job and Tax Act. And that overhaul actually simplified taxes. So if you are an employee and you just get a W-2, don't have much in investments, then you probably don't need a CPA. You probably don't need H&R Block. You can probably do it yourself because they dramatically increased the itemized or standard deduction. And so for most employees or people that are employees, they're not probably going to get a whole lot of value in hiring a CPA unless they just want to make sure it's done right. I tell those people, says, yeah, you can hire me. You may be doing it out of convenience and maybe a little bit of an insurance plan. You know that the CPA is going to do it right.
Right.
Now, on the flip side, if you have a lot of investments, you start having rental properties, especially if you have a small business, you're going to want to look at hiring a CPA.
Okay. What about like kids in school? I mean, it's like at what point? So even if you're on a W-2, but you've got kids that are going to college, or you want to be doing, your retirement funding and stuff. Does that make a difference or no?
It can. It depends on the complexity of your situation and your finances.
Okay.
Because you can have if you're a W-2 employee and you have kids in school, it really depends. I say it doesn't hurt to call a CPA.
Okay.
No matter what. If you're looking at and you're on the border of hiring somebody, I say just call them and see if there's someone that will talk to you and address your area, and they'll be honest. They'll look into your situation, just because everyone's case is so different.
Oh well, and you guys do like a 15-minute consultation, right?
Right.
And you're not charged for it. It's like you'll say, yes, this makes sense, or no, you can do this in this direction.
Right.
So.
Yeah, we do offer the 15 minutes, and that's probably unusual.
Right. I was going to say that's amazing.
Yeah, and we end up having people calling that says, hey, I owed last year. Why did I owe? And we can have a discussion on the potential of why you may have owed taxes. So it's really hard to say. I say it really doesn't hurt in calling a CPA if you're unsure. We have college kids that actually contact us and hire us just because they know that once they graduate out of college, they're expecting to have a really good job, and they just want to start that relationship with the CPA early, so that they understand where they're getting into, and they know that that they want a CPA handling their finances, and at that point, their stuff is pretty easy. But I've had clients, I can think of one client that I've had, and they were just a W-2, very simple. He was with me when he just got out of college, and he moved into, all right, now he is buying a new place and he's renting half of it. Mm. So then we have a discussion about that. And then he got into owning another place that he rented. And then he got into managing a small dojo.
Okay.
Where he's working on his own, and now he's getting into actually potentially purchasing a dojo. And so we had a conversation going back and forth that says, all right, these are the things that you should probably consider when purchasing a dojo. But that's not really a tax thing. I mean, we got into tax implications of purchasing a dojo, but we also got into what is your mindset? Like I had a frank discussion with them and says, based on this, what the dojo was doing previously, that what you're purchasing, based on what it's doing previously, and based on the finances, you're going to make X amount of dollars. If you made that X amount of dollars for the next 5 years, is that going to make you happy? Does that meet your financial targets over the next 5 years? Because if it doesn't, this may not be an wise investment, even though you might be making more money. But if you can't scale it to meet the finances that you are looking at achieving, then why would you go into that? Because then you maybe want to look at other opportunities that do reach your financial targets.
Right. And so that's where that's a great example of why having a relationship with a CPA like you that's not transactional, right, makes a big difference.
Right.
So for very little investment, you're getting, a lot of real world financial guidance.
Right.
And you're not telling him what to do. You're just asking these questions so that he can make his own decisions,
Right.
which is really important. It's funny that you mentioned that. I was listening to a podcast yesterday between a guy who's been in the business of buying and selling companies, small business for years. Mm-hmm. And that was so much of what he was talking about. He goes, people don't know where to go to have these conversations while they're making these kinds of decisions.
Right.
It's huge. And so he was just saying, he's written a book about it, and because so many people make all these mistakes, and then the buyer and the seller and everybody's unhappy, but they just didn't know they didn't know how to look at it.
Right.
So anyways, and so that's a great example of another service that you guys provide.
Yeah, and we work all year round. So it's not like an H&R Block, which is, they work during tax season and they're gone. Because we handle so many clients, we see a lot of situations. And so we know a lot about a lot about little things.
Yeah.
And I wish that our clients actually contact us more throughout the year, because we've had clients after they completed a transaction and then they come in during tax time and I go, why did you do it like this? So that's the way I did it. And I was like, well, if you would have talked to me, I could have advised you to do it a different way. And it would have not necessarily saved on taxes, but it would have saved you on, it could have saved on taxes, but it could also saved on the income that you earned from the opportunity or the pain and anguish that you had from the opportunity.
Yeah. So, well, all good stuff. How does it work between states? So if I lived in Oregon, could I work with you to do my taxes? Does it matter?
Yeah, that's a good question. We had a client call yesterday. It says, are you licensed in all 50 states?
How does that work? I don't know.
Yeah, because her accountant said, well, she was in New York and she had a business in California. Okay. And apparently there's an issue with California that need to be resolved. And the accountant says, well, I'm not licensed in California, so I can't work on it. And it's not true, actually. You don't have to be licensed. There is no license in any of the states as far as preparing taxes. So we can prepare taxes for anyone in the other states. The key thing is, though, is the preparer comfortable preparing the state return? Because every state return is different.
Okay.
And each one has their own laws. Now, the tax laws could be similar, but they're all different. So, we have clients all over the U.S. We actually have clients internationally. We have clients in Canada. We have one that went to Ecuador and retained us when they were a Michigan resident and moved to Ecuador, and now they moved back. Now they're going to Thailand. So we have a client that's in India. So it
doesn't matter.
It doesn't matter.
Okay.
I think what the key for us, now we're not a large tax firm, so we can't handle international taxes. So like a Canadian client, they will have a Canadian tax preparer, and then that tax preparer will do the Canadian return. and then we do the U.S. return based on the Canadian return, or vice versa.
Okay.
Or we do a U.S. return, and then they hire somebody in Canada to do the Canadian return.
Canadian one, so you can collaborate.
Correct.
Right? Okay. Okay. No, that's good to know. Well, so this has been really interesting. And I know that you're coming into tax season now. So is there anything that you can, advice you can give for people like preparing, getting ready for this time? Because I know it can be really stressful.
Right.
For people. So what would you suggest that they could do to just make it be, if not a pleasant experience, a more pleasant experience?
Yeah, if you're hiring a CPA, I would make sure to understand what information they need to prepare your taxes.
Okay.
Because we have clients that provide a little too much or too little information, and we have others that provide too much information. And so, because we have clients that prepare these massive worksheets, and I'm like, why are you preparing these massive? Do you like doing these massive worksheets? I don't know why you're preparing these massive worksheets. We deal with it and we work with them, but that's a lot of time that they're putting into these massive worksheets when we may use half the numbers on the worksheet. We're using other documents. You don't necessarily have to provide an accountant all your business receipts. Really, if you want to make it simple, ask your accountant what is necessary to prepare your tax return. And so in the case of a client with a small business, that could be someone provide your tax documents and then summarize your income and expenses for your business or your rental. We don't want a shoebox. Now, we can handle a shoebox, but that just increases cost for you or for the client. So we rather them come in and summarize their documents. And I always say, come in as early as you can.
Okay. And
that serves two reasons. One, by the time it reached mid-March, we're ready to pull our hair out. So CPAs and all accountants are extremely busy. I can tell you that while we want to call ourselves being perfect and we do everything perfectly, but we are human. Most mistakes are probably going to happen between March 15th and April 15th. Nothing major, but if we make mistakes, that's going to be during the time. And so we're less busy prior to March 15th. And that's one reason to file early. The other thing is fraud. Fraud is a very big thing in our industry, especially for taxes, because there's a lot of people that are scammers out there that are filing fraudulent tax returns and claiming refunds.
I've had friends that has happened to.
Yeah.
And you're just like, how is that even possible?
Well, all you need is a social security number.
That's insane, right?
Yeah,
that somebody could file taxes on using your number.
Using your number.
And get a rebate, and there's nothing you can do.
Well, there's something you can do. It just delays
the processing. Right. You can't stop them doing that if they get into that mode, but then you have to go through all of that process to make it right.
But if you file early, you file the tax return before they do.
Got it.
And so when you file early, then when the scammer files a tax return, they can't file it because a return has already been filed.
And what about does it make a difference to how quick you get your refund when you file? So if you file early, does it come back quicker than if you file in April?
Actually, no. It's
really?
usually it depends on, what matters is whether you do direct deposit or you request a paper check.
Okay.
If you do direct deposit, it's usually between 7 to 10 days.
That's
you'll
just
get your
amazing.
Refund.
I mean, that's great.
If you do paper check, you're probably looking at 7 to 14 days.
Okay. So one thing you reminded me of too is I work a lot in the nonprofit world, right? And you're one of the few firms that is specialized in working with nonprofits.
Correct.
And that was so helpful when I worked with your colleague in the nonprofit, and they sent me a list of everything that they needed.
Right.
And it was like, I actually felt my blood pressure go down, right? My nervous system calm down. It's like, okay, I can do that. Right. We're good on these things, instead of that being that gray area, like, oh, what are all the possibilities of things they could be asking for?
Yeah, so my partner, Carrie, and she has over 30 years experience in nonprofits now. She would say she's 30 years old. So I guess she's been doing them since she was a baby.
Yeah. Okay.
But she loves doing nonprofits, and that's what she mainly focuses on. I mean, we do other for-profit audits and reviews and compilation reports for them, but our bread and butter is with nonprofits.
So, and that is that's hard to find. That's hard to find, and I did appreciate so much that really concise list of all the things that so I'm not bringing a shoebox in, right? Or leaving stuff on the table that, or stressing about, how do I have the right stuff?
Right.
So anyway, so that was very helpful. So all good. Well, thank you so much for being here and supporting Good Fat Life and your customers. I know they appreciate it because everybody that we work with together just loves working with you and has found it to be, feels good. They feel good about their taxes, their tax plans, and the things that they're doing.
Right.
And we also, one thing I love that you do too is you also meet with people before the end of the year to say, hey, is there things that we need to consider that we do now so that you have the best tax outcome possible?
Or just understand what the tax impact's going to be.
Yeah, and that's so comforting. It's not like there's a surprise that's coming in March when, stuff happens. And I've also seen clients come to you that had not been able, for whatever reasons, they always are filing extensions and getting everything late. And that creates so much stress, right? So then they get in a routine with you and then it just goes the way it's supposed to.
Right.
And that just makes people sleep better.
Yeah.
So anyway, so thank you so much for being here.
Thank you for having me.
It's been really special talking about this topic that can create a lot of stress.
Right.
Right? So your CPA is your friend. And on that happy note, I encourage you to check out Good Fat Life, Good Fat Life magazine. Go to our website, goodfatlife.com, and we got a lot of amazing things happening. And then go out and live your Good Fat Life today. Thanks.